There are many factors when it comes to interest rates. Don't just assume that you see the headlines, hey, the interest rates are this, that you're going to get that. There are many, many factors. So we want to go over this with you. And so this way you have some knowledge over that, right? So number one is going to be your credit scores. A lot of people are aware of this. If you have worse credit scores, you're going to have higher interest rate. You have good credit scores, you're going to get better interest rates. That is very common sense that you have kept a good history, you have taken care of all your debt and you're making payments on time. There's no issues with your credit, so that's why your credit scores are good. So you should have better credit, you should have better interest rates if you have that, right? Next is going to be your credit history. Again, if there's any late payments, you have bankruptcies, you will have different, a lot less options when your credit history is bad, right? The next is going to be your employment type and income. If you're on W-2 compared to 1099, there might be a different in interest rates because you're going to have different loan types. So when it comes to that, okay? So the loan size also matters. So let's say you're getting a loan that's going to be in the conforming limits, that's going to be normal interest rate. But if you're getting a jumbo loan, your loan sizes increases, there's more risk for the lender. They're going to charge you a little bit higher interest rate on that as well. So you got to make sure the loan size matters as well. Next is your loan to value. This is LTV, meaning how much loan to value that you have. How much money are you putting down and what is bank giving you for that, right? So let's say you're purchasing a house, you want to put down 10% down payment. That means there's a 90% loan to value. That 90% of the money is coming from the bank that's going to pay off the current seller, and then you're going to pay back that loan to your mortgage. So the point here is that if your loan to value, if you're putting more down and the loan to value is lower, your interest rates will be better as well. The more money that you put down, there's less risk involved for the lender. You have more skin in the game. Okay, so you want to make sure of that. Next is going to be your loan type. If you go with the FHA compared to your conventional, there are two different programs. Or if you go with non-QM, these are loans where we as loan officers don't even check your income. We just look at the property itself. There's one loan called DSCR, meaning we're just checking the property, how much money that is bringing in, and how much your mortgage payment will be, and we can tell you how much you qualify for that. So no income check loans will have even higher interest rates. Okay? Your DTI matters a lot. Your DTI will be similar to loan to value. Is like just like it has its limits. So your debt to income, how much you're bringing in and how much you're going to use that for the mortgage. If you can afford, if your DTI is lower, that's better for you. That means you can actually afford to buy a bigger house, but you just choose not to. So just these are a couple of things: your credit scores, your credit history, your employment, your income. These, all of these things matter a lot. So just don't assume that you see the headlines for 6%, 7%. Can you get that? Maybe you can get even better depending on your situation. So how can you be rest assured that you have the best one? You're going to go ahead and shop around with different loan officers. You're going to find out, hey, what they have to offer based on your situation. Don't just assume that one lender is denying your loan or giving you, saying that, hey, you can only afford X amount. You can go to a different lender and see what they have to offer, right? So go to different lenders and find out what the interest rate that they will give you. You're not locking in today's interest rate. So even if they give you something today, tomorrow things can change. You're not locking the interest rate until the last stages of your loan application before the closing, obviously, but you want to lock it. There's no right or wrong time. It's just like, matter of, when you need it, and that's when your loan officer is going to lock it for you. So we wanted to keep this as a short video. Just don't want to make sure that just want to make sure that you guys know that there's many different factors. There's a lot more than this, but this is the top ones that determines your loan, your interest rates when it comes to your loan mortgages. I hope this helps. You guys take care.